Welcome to etvFutures.com. Today is Wednesday, January 2nd. I'm Caitlin Sisney with your Commodities Recap. Crude in New York futures hit the $100 mark and closed up nearly $4 on expectations that U.S. crude inventories fell for a seventh consecutive week and on concerns that violence in Nigeria may cut output from Africa's biggest oil producer. Crude closed the day at $99.62 per barrel on the NYMEX. Meanwhile, natural gas rose 36.2 cents to close at 7.845 per million British thermal units. Gold futures soared $22 to end at their highest level since 1980. Gold rose $22.10 to close at $857 an ounce. Meanwhile, silver rose 37 cents or 2.5% to $15.22 an ounce. Today we're joined by Derek Frey from etvFutures and Options. Derek, can you recap today's action in the energy market?
Okay, recapping the action that we've seen today in the energy and metal sectors, what a wild day it's been, obviously. We've seen some extreme moves. First thing I want to do is just caution everyone about the movement that we've seen today. First of all, we are still largely in holiday mode today. Liquidity is still very low across all markets, commodities, stocks, bonds, everything. So keep that in mind when you're taking a look at these some of the movement that you've seen in the last 24 or 48 hours. All of these extreme moves again have been done on the backs of very low volume and low liquidity. So you do want to try to take them with a bit of a grain of salt. There is a strong probability that we could see a lot of this movement move back towards the mean as more liquidity and more players come back into the market. This week and, of course, next. Next week will be our first full real week with full volume and everything else. The remainder of the week volume should increase each day, but really nothing is back to normal until we get into next week. So that being said, gold did push through the magical 850 level and touched 860 briefly. Again, I don't expect to see too much follow-through in the short term. Look for a pullback. And moving quickly over to the energy markets, of course, there's some controversy, I must say, about whether or not we really did test the $100 level. I know that the pit did trade $100, but the fact that the electronic was quite far away from it does leave the possibility that that trade will be, quote-unquote, what we call whistled out, or basically taken away or disallowed. So we'll have to see tomorrow if they, in fact, allow that trade to be real or not. But either way, the bottom line is whether we're at 99.50 or 100 is really irrelevant for the underlying economic picture. And obviously the two key markets that we're talking about here, gold and energy, are sending a clear signal to the Fed that inflation concerns should probably be pretty high on their radar screen as we move forward. And judging by the statement in today's minutes, it looks like they are getting that message.
That was Derek Frey from etvFutures Futures and Options. I'm Caitlin Sisney. Join us later for PM Exchange right here on etvFutures.com.